As we step into the coming week, the NDA has come out with an absolute majority in the general elections in the country. This obviously is a great sign of a stable government in the center, which the markets were expecting, and the hope of reform processes being carried out in a lot of sectors where there were bottlenecks created. So one can expect over the next 3 to 6 months a lot of reform processes carried by the new government as we carry along. Specifically more to do with the capital investments that were stuck up in a lot of projects related to infrastructure, power, and a lot of announcements related to FDI to get a lot of money flowing to the country from the foreign institutional investors. So in that sense itself, the markets are poised to go higher. Even at the current valuations, Sensex is valued at 15 and a half times forward earnings, which is considered reasonable considering the 10-year averages. So one can expect a rally in cyclicals going forward as well, specifically in the banking pack, infrastructure space, capital goods space, cement companies, and a few mid-cap ideas as well. So running with this theme, if you look at the kind of corporate earnings strategically that one is looking at, one can expect 18 to 20% growth over the next 1 to 2 years, assuming that the cycle, the working capital cycle that the corporates were facing and the credit crunch that they were experiencing will slowly and steadily come down. This will also effectuate into the bank's balance sheet with stressed asset actually coming down and healthier numbers being reported. So in the overall sense of things, I think the return on equity should improve, not only for the corporates but for the markets in general as well. So in that sense itself, our view is that private sector banks, which have been exceptionally well so far, would continue to do well. So something like an ICICI Bank, Axis Bank can post good earnings trajectory going forward and operational efficiencies. And the public sector space, something like a Bank of Baroda, State Bank of India, Syndicate Bank, Canara Bank, are a few banks that we feel can do exceptionally well. Within the infrastructure pack, if a lot of announcements are taken in by the new government and the initiatives taken to release and expect capital investments to flow through, we can expect a lot of movement happening in quality stocks like Larsen & Toubro, KEC International, Sadbhav Engineering, IRB, Crompton Greaves, ITNL, where we are specifically bullish. Again, I think if you're looking at the infrastructure sector doing well, I think cement companies like ACC, Shree Cement, JK Lakshmi should do well. Because I think looking at the earnings trajectory and the ROEs that these companies were experiencing at around 10%, considering the capacity utilization at 70%, which is again at a 5 to 10 year low, I think any base effect which will kick in terms of higher efficiencies will drive earnings growth. So clearly I think cyclicals is one space that investors should watch out for. Look for quality names, look for companies with strong balance sheets, look for robust managements and carry the momentum. Our own feel is that the markets might touch levels of 600-800 in the near term, facing some pressure, selling pressure from the domestic investors. But from a long-term view, I think it is an absolute enjoyable time to enter into the markets. Keep a long-term view. Nifty can reach higher levels of 20-25% from the current levels over the next